at this point, as we head into the Sunday overnight session and the upcoming week, all of the markets are oversold and near or at bigger picture or larger time frame support. So one of the ideas that we discussed, I believe, in Thursday's recap and maybe even in Friday's recap was that the market's bearish, but now it is approaching significantly better areas of support where larger time frame buyers have potential to step in, and that idea is still in play. So if we take a quick look at the NASDAQ, we can see that this was the balance that NQ broke down from, and we have already surpassed the 100% range extension on NQ, and we are now approaching this very significant area of support between roughly 16,925 up towards 17,200. This entire area is pretty significant support in NQ. So NQ is oversold and overextended into some really good support where there is potential for larger time frame buyers to step back in. So I think we will need to be aware of that idea and exercise caution even on the short side now, because location is going to be quite aggressive for any new shorts jumping into the market now. So we are at a important inflection point. If we take a look at the Russell, we can see that the Russell has been the weakest market on the larger time frame, and it too is essentially at this key support around 1890 to roughly 1920 or so. So again, oversold, overextended into significant support where it would take much more effort from the sell side to push the market through, right? And that's exactly why our short-term bias, you'll notice, turned neutral on Friday, right? Up until then, the short-term bias was neutral bearish, but now the intermediate flipped to bearish, which means that anytime we get a bounce into better resistance, into intermediate time frame resistance, we still expect sellers to be active there. But the more aggressive resistance areas warrant caution now, right? That's kind of the idea behind changing the intermediate time frame bias to bearish and the short term to neutral, because now we are bumping into or pushing down into significantly better support where short term buyers could step in and we could get a short-term bounce on the daily chart. But from there, anytime we bounce back up into intermediate time frame resistance, so as an example for the Russell, like if the Russell bounces back into the 2009 to 2030 area, right? Even if it bounces back into this previous swing high of 2001 roughly, we could get sellers active, but 2009 to 2030, 35 or so, that would be much better resistance where sellers are likely to be active. That would be considered intermediate time frame resistance. If we bounce back to 2056 to like 66, that would be intermediate time frame resistance where sellers could step back in. So short term we are neutral, but intermediate we are still going to continue to maintain that bearish perspective. And same thing with the NASDAQ, right? If we bounce back up into, kind of this 17,958 to roughly 18, let's say 120, 130, right? The balance area low, essentially, if we bounce back into the balance area low here, that would be an intermediate time frame resistance area where sellers could then step in. And in this case, it would coincide with the 61.8% retracement, so that makes it quite significant. So, if we bounce back to the 50 to 61.8% retracement on the daily chart, where there is also the balance area lows, like that would be significant resistance in the NASDAQ, and it could still attract sellers in alignment with that intermediate time frame bearish view. And the S&P, in comparison, by the way, is still holding up much, much better than the NASDAQ and especially the Russell. So on the larger time frame, the Russell is the weakest market, as it usually is. And after that, you have NQ, and then the strongest market so far is the S&P. So that means we should be even more careful on initiating any new shorts at these lower prices in the S&P, because compared to the other markets, it is still holding up significantly better. It doesn't mean that the market can't go a bit lower or that, we can't sell off. I mean, this is not meant to be a prediction. It's part of our preparation. And let's say that tomorrow NQ and Russell continue to sell off. Well, they would be approaching even better support, right? And because the S&P is relatively stronger as compared to the NASDAQ and the Russell, if NQ and the Russell hit more significant support and start to reverse, well, then the S&P could follow and it could reverse as well. And because it's the stronger market, it may reverse even more quickly. And the magnitude of the reversal may be even better in the S&P, because so far it is holding up significantly better as compared to both of the other indices. And that's why our short-term bias will continue to be neutral. As we head into the upcoming week, the intermediate time frame will continue to be bearish. And again, with that perspective, with that view, if ES bounces back up into, let's say, 5117 to 27 or 5093.5 to 5103.5, yeah, those are still spots where sellers are likely to be active. Now, those are still decent areas of resistance, especially 5117 to 27. If we go higher and we tag 5147 quarter to 57 quarter, that is still a bottom of balance and a balance breakdown area. That would still be a spot where sellers could be active. So that's going to be the perspective as we go into this upcoming week. Again, we as day traders always need to be quite flexible and nimble anyway. And now that our short-term bias is neutral, I think it just adds another layer of necessary flexibility in our intraday view, because when the short-term bias is neutral, the intraday bias gains more weight. So we need to be quite flexible, but just keep in mind the market is quite overdone. It's close to some really decent support. The other markets are pretty much at larger time frame support, and that could create a situation where there's simply not enough risk reward for any new sellers to step into the market. And of course, that can create a situation where there is much better risk reward on the long side. So we're going to go with that view as we head into the upcoming week.